Hello, hello. Testing, testing. All right. Hello, everybody, and welcome to BlockSpaces Live. We are back again this week on Friday. We've been doing this every week since we've been in quarantine. Well, not every week, but coming up on our, 7 weeks in quarantine now. Just to record that for prosperity's sake when we look back on this and go, oh my gosh, that was like the craziest, most surreal thing ever. But we have been really enjoying doing these live sessions with you guys every week, and we've gotten some great feedback. So it's something we might continue to do even when we're not 100% virtual. This session today, I'm really excited about because it's really something that I don't know that much about. Which that's not unusual, but in the scheme of cryptocurrency and blockchain, it always kind of appeals to me to learn something new. So I'm really looking forward to this session because this is kind of a subject that I'm not super familiar with. And highly ironic to me that we are also celebrating Bitcoin Pizza Day today, which celebrates the 10th anniversary of the very first transaction on Bitcoin for a physical item. So that's only been 10 years ago. And today we're talking about central bank digital currency, banking currencies, stable coins, a bunch of different kinds of cryptocurrencies out there representing all sorts of things. We've got, government talking about digital currencies. So it's really amazing to me that we've come that far in a decade. So grab some pizza, and I'm gonna let our guests introduce themselves. And really, I just can't think of two people that could do a better job on this topic than these two guys. So Rich, you wanna lead us off here with a quick introduction?
Sure. And thanks a lot for having me on the show. I have been watching the last few weeks as well. So I think this is a great format and getting the information out there in a short, concise, period during the lunchtime. So my name is Rich Foster. I am a former VP at Citigroup. I was the North America Settlements Manager over the last 12 years. So basic role in summary was the settlement bank, end of day with the Fed, with DTC, all of the central bank processing. And then a couple of years ago, I was actually the industry liaison for a user group for the settling banks. So there's a lot of communication with the regulatory bodies about different processes. And a few years ago, I heard about a company called Finality and a utility settlement coin, and that really got me interested in the wholesale banking side of the cryptocurrency world, if you'll call it. So with the E2E blockchains, we formed a company just to try and make use of this. Very early stages right now. We'll talk about what's going on, but that's my background.
Well, we are just thrilled to not just have you on the show, but just have you in our periphery, which you guys have been a really great partner for BlockSpaces. So that's fantastic. Gabe, probably a lot of people that are watching may or may not know you, but go ahead and take it away.
Yeah, thank you. So I'm Gabe Higgins. I'm a co-founder with Rosa of BlockSpaces, Tampa Bay blockchain innovation development studio. So we're really happy and excited to have you, Rich. I know we've been talking about this subject for a while now, and it's really bubbled up in the last several months across the world. I keep hearing and reading news articles about central banks actually looking into this. And so maybe to just kind of kick it off here, maybe it would do us kind of set the ground level here on defining what is the difference between these kinds of, there's different kinds of these digital currencies now. We have decentralized cryptocurrencies, we have corporate corporate backed or created currencies, digital currencies, and then what we'll be talking about as well is the state-backed cryptocurrencies or government created currencies or digital currencies. So maybe you can go into distinguishing each one of those categories.
Yeah, sure. So I got this actually from Don Tapscott with the Blockchain Research Institute, and it was a good summary of what the three differences are. So he kind of labels decentralized crypto, the OGs, I call it the Bitcoins, the Ethereum's, kind of what you guys have really been doing over the last 10 years. Then the corporate crypto, you got the stable coins and like the JP Morgans, the Paxos, really, something that is within a corporate bank, investment bank, that sort of thing. And then the state-based crypto is really anything related to the fiat. So the two main ones, we've got the China one, obviously, but for the US, the digital dollar project, and then the utility settlement coin from Finality is something else that's kind of in between the two. So that's kind of where we set the role between the three types.
That's super interesting. And so like that kind of, like I said, that kind of boggles my mind, just considering how fast and how far we've come. And, Gabe, can you walk us through a little bit about how did we get here? I mean, you and I have been part of this space of the 10 years since that first physical asset, transaction. We've been a part of this for 7 of those 10 years. How did this happen? How did we go from first asset to 3 different kinds of cryptocurrencies representing all of these different sorts of industries? Can you give us like kind of a brief history of how we got here? Super brief.
Oh, sure. It's been very fascinating. Of course, everything started with the release of Bitcoin 11 years ago now, and from there, we've seen kind of the evolution of where the technology, the underlying blockchain technology, has kind of evolved. Of course, with many different other cryptocurrencies, with all different kinds of feature sets. And then now we're looking at how banks at first kind of dismissed it, ignored it, but then they're seriously taking a look at how to leverage the technology for themselves, so they're not being disrupted by it. They're using it to disrupt their own industries. So this has been kind of how it's just evolved naturally. I mean, the technology itself has been kind of tested and vetted, and like I said, it's evolved in such a way that these different institutions are able to leverage different feature sets of the technology and explore how it can better their processes, either internally or externally, and use it to make things cheaper and faster and more secure.
Okay, and so that's kind of a great lead into my next question, Rich, because this is, and these are some questions that I just legitimately have. Like I said, this is sort of an area of this whole space that I'm not as familiar with. Why would a bank, what is the draw? Like Gabe said, it makes these sort of banking transactions better and more efficient. Where is that fitting in within like the banking system?
Yeah, well, just to touch on kind of how we got to this point, it's always been interesting. We call it the golden record idea of there being one digital original record. The problem obviously was always with the decentralization, not having that regulatory control. Obviously with banks, you have a lot more regulations you're dealing with. And I think once the permissioned network and the permission node idea came out, that's really where it exploded from the bank side. And I think the main thing that we're looking at is from the financial infrastructure, right? So a lot of what's been built so far on the Bitcoin and all the different processes, you're still not at the point of, I don't want to call it not real money, but it's not the fiat currency. And once you want to get to that real money, unfortunately, you're off the chain, right? And so that's the last piece that the banks really still do own. And I don't think you're going to get that changed in 10, if not 20 years. I mean, the infrastructure is just so large. It's sometimes people think we're on a speedboat, but you're really moving, the Titanic. And even if you go full speed ahead, it's not something that you can just whip a U-turn on. But it needs to be upgraded. So that's one of the things, even with the central bank digital dollar project, is they're not focusing on how it's going to be used. They're not focusing on who's going to build what on top of it. They just want to get the infrastructure upgraded. We're in some of it's 1940s technology, 1960s technology. So if you're going to upgrade the system and something this revolutionary is out there, why would you keep building on, legacy, they call analog systems? This is the perfect opportunity to upgrade in the right way.
Yeah, I completely see that. And we're seeing that just kind of in enterprise across the spectrum, right? I mean, if you just think of blockchain as even if you just think of it as nothing else, is the latest, greatest database, which, of course we all know it's so much greater than that. But why wouldn't, if this is the way that industry and business is trending, and you have the opportunity to kind of rebuild these systems with the foundational technology that makes all of these things just work so much better together, even as we're talking about incorporating 5G and AI and Internet of Things, these are things that all need blockchain type systems to run more efficiently. If you have the opportunity, why would you build on old technology? You're totally right. And then the other point that you brought up that I'm really interested in is this central bank digital current. I mean, so we have financial institutions, we have the JP Morgans of the world and stuff that are interested in it, but talk to me about central bank digital currency. And both of you guys can answer this. Rich, if you want to go first, help me understand that, because that's a really interesting play as well. What's the interest there?
Yeah, and I think the hardest part to try and describe how it's going to work is having to start with how it works today. A lot of people really don't see what happens today when you write a check. Well, not write a check, when you use your credit card, or even when you pay online. And
can I just interrupt you? Please walk us through that, because I think you're absolutely right. Explain to the people that are listening how that works, because I don't think people know. I really don't.
Yeah, so I mean, you've got millions and billions of payments that are happening every day, and obviously, you're not going to settle your money with the central bank on a one-to-one basis, right? That's just not feasible. So the short, I guess, example is, at the end of the day, you've got a small amount of what are called net settling banks. I think there's 17 out there, Citi being one of them, JP Morgan. So all the participants that are actually processing transactions, payments, with securities and that sort of thing, everything's actually getting netted down intraday. And at some points, funding has to happen, but then there's an actual net settlement that happens that physically settles everything. We call it settlement finality, where the money is actually moved in the central bank accounts. And so you kind of got those 17 banks, and everything filters back down towards the end of the actual, customer for all intents and purposes. But the difference between the credit card or any sort of check process is you're not actually putting a demand on the central bank. You're just putting a demand on the actual institution that's writing the bank that you have an account with, right? So each layer in that chain has a risk to it, has an obligation. So, my risk is my bank. My bank's risk is their bank. Then obviously those settling banks, they're the ones that the Fed has the risk in for all, for the complete process. So it's that piece there where the actual central bank and the Fed accounts are being moved, where the real money is being moved. That's the piece where we talk about central bank digital currency, is getting that onto the blockchain so that we can have the same sort of instant settlement, the shared ledger that is spread out between all the different institutions.
Really interesting. And Gabe, is there, we've been in this space for a long time, and I know there's like this, I was talking about it yesterday on the podcast that I was on, this sort of like, here's all these applications, and here's the ethos, or whatever you want to call it, of this community. Tell me how you feel as a longtime early adopter, like when you're hearing things like central bank digital currency and some of these applications. Are you falling on the side of, this is amazing and we should use this technology however we can, or, let's move toward, because Bitcoin, of course, people think of it as kind of disintermediating some of these banks and some of these institutions. What are your thoughts on that as someone who's been in the space for a long time?
Yeah, so of course, I've been thinking about this for a long time, because we've kind of seen the shift. Probably 4 or 5 years ago, we saw the shift where enterprises started stepping in, and then now we're seeing central banks running wild here with the idea, the concept of instituting these digital currencies, and it really is driven. Make no mistake, it's been driven by what digital currencies like cryptocurrencies have been able to demonstrate with cross-border payments and secure payments on the internet. And so now we're seeing all kinds of news where all the central banks around the world have been talking about this for years, releasing papers about it, guidelines on how to institute your own cryptocurrencies or digital currency. Now, there's going to be distinctions, of course, on what we mean by that. Cryptocurrencies generally are referring to like the open, decentralized networks, but leveraging the same kind of technology, albeit in a more controlled way, is where these central banks are leaning towards, issuing these digital currencies, governed by different mechanisms, not distributed consensus necessarily, but more of a closed source kind of network that they can control, modify, change if they need to. But the Bank of England, the Bank of International Settlements, the IMF, the Chinese central bank, and even the former chairman of the CFTC has now a project to institute a digital dollar. So we're just seeing a lot of interest in driving this forward, because I think they all recognize that this is the future. This is how payments are going to have to be ran in the future, because there's so much fraud happening with, fiat currencies weren't designed for the digital age. And digital currencies obviously are. So this is why this kind of shift is happening, and it's necessary, and it's inevitable on my view.
Yeah, I totally see that. And I know that you had done some presentations last year and was even on the news here locally talking about Facebook and Libra, Gabe. And, we've seen, Libra, of course, so Facebook being an individual company, JP Morgan now kind of launching their own coin. What do you see that, Rich, as being kind of the movement? I mean, do you see that more and more corporates are going to be creating kind of their own coin, so to speak, or, this shift toward banks, or are all of them going to live in harmony together?
Well, that's, going back to JP Morgan coin, that's kind of the downside is, they can build the great system, the quorum, and the technology, but it's very hard to get a competitor to want to use another bank's application when the accounts have to be held at that bank. So that's one of the things with Finality and the utility settlement coin is it's a consortium of, at this point it's 17 banks, I think, including the NASDAQ. And the company itself is, it's not one bank, it's all the different groups. But I mean, going back to what Gabe was saying too, what you've built so far on top of everything that I'd say gets to the point of the fiat currency, the stable coins was a way for everything to be tested out by the banks for everything up to the payment piece. So there's a lot more benefits to the blockchain system than just payments. You got the digital identity, you've got things that are on top of the payment system itself. So we're focusing a lot on the payments in this conversation here. There was still a need for the banks to even understand the technology and see how it would affect any part of the process. So I don't see that even going away. It's still going to be the decentralized process that it is. If there's some sort of regulatory settlement that's needed, again, for securities, you're going to have that semi-permission network. And even with the JP Morgan coin and with the USC, it isn't available to everybody. Even, for the banks, it's going to be wholesale banks. So it's going to be limited to who can access it as well. So it's going to be a mix between the two, but I do think that the stable coins have given them that vision into what it is that the system does. Now, going back to Libra, that was a mistake just on the way they approached the regulatory piece of it, right? You've got every country that was going to be involved with that, and the way they were packaging it is pretty much like an ETF, and those are securities, and you're getting to the whole process of the amount of money that's going to be controlled by one small organization. It's going to raise red flags. So you got to have the right regulatory approach to something that large when you're getting the payment system. So I think that's where it kind of fell through, but definitely gives the banks a lot better avenue into using the technology for sure.
Really interesting. And Gabe, I think I just saw, I'm sorry, I just kind of saw it in the periphery of the chat. Did you say a question came through? Can you tell me what that is? Because I'm sorry, I can't see it for whatever reason.
Yeah. So we had a question from Matt, and his question is, do you think that there's a future, call it in 5 years, where digital currencies are incapable of implementing the travel rules that are allowed to touch public institutions or organizations? What do you think, Rich?
So I'm guessing we're talking with the control of the cash when it comes to the privacy. If that's the way of the question. One of the things with the digital dollar project, and I use that one because that's really the main US based central bank project that's out there. Chris Giancarlo, that's one of the things he did mention is privacy, right? People really like the decentralized nature of the Bitcoin because of that privacy notion, and cash, people view it as being completely private, but he made a good point that it's really not up to a certain dollar amount, right? So you have privacy up to $10,000. After $10,000, unless you're keeping all the money stashed away in your house and that sort of thing, the banks do have to start reporting it. So he did make a point to say, you do have to look at the privacy, and the U.S. is one of the few countries that do have in our Constitution. He mentioned the Fourth Amendment and the government being able to review things unlawfully. Now web browsers are one thing, but even reviewing the money, there could be a limit to say of the dollar amount that can be looked at. So that's something that they obviously are very aware of when it comes to what people are concerned with the usage of cash versus a digital currency. So hopefully that's the direction that the question was going.
Yeah, I think so.
Yeah, and it may have been, I mean, I don't know why it said travel, but it like, I don't know. I mean, I instantly think about, do you mean something from COVID-19 and traveling, but probably not. I'm like, so COVID-19 in my head now. Well, we do just have a handful of minutes left. And in those handful of minutes, I really want to throw it to you, Rich, and just talk about finality. And just kind of this whole concept of settlement, the utility settlement coins. And I know, because I can just speak for myself, that there's so much to absorb here. I almost feel a little bit like a fish out of water, like the first time I heard about Bitcoin. So maybe just walk us through that project and the whole concept of this utility settlement coin, and we'll wrap it up.
Sure. And I guess since most people are familiar with the stablecoin process and how that works with the comparison to the fiat currency, right? So going back to that obligation, so today the stablecoins, and even with the JP Morgan coin, the money is with a bank, whether it's custodian, JP Morgan, Bank of New York. So that's where the risk is to confirm that the money is there, right? You remember Tether back in the day, there was a whole controversy of whether or not they had the amount of money. Now you've got audits and that sort of thing, but you're still dealing with the entity that's issuing that stable coin. So the difference with the utility settlement coin with those central banks is that the money will actually be in a central bank account. So while it's not issued by the central bank, it is controlled by the central bank, and everything that is issued by the utility settlement coin and finality, which they're referring to now as the finality payment system, right? That is going to be controlled by the central bank when it comes to that central bank account. And so there's a process when it comes to creating and redeeming the currencies when money actually gets exchanged into the actual fiat currency. But this is the closest you can get to having a central bank digital currency that's not issued by the CBDC. And a lot of the projects that we can build on top of the USC, you could really build on top of the central bank digital currency as well. It's not really limited to who's issuing it or it's really who's backing it. So what they talked about, it's again, the obligation of the government. So the digital dollar would be 100% the obligation of the government, whereas the USC, you've got a slightly small layer in there that finality has the account at the central bank, but it's way closer to the central bank than it is today with the stable coins and the potential for those banks to not just fail, but just not have the actual assets. So I think that's, the summary that we always try to give to everybody is that, it's a mechanism to get all of the blockchain systems and even legacy systems that are out there to get the settlement finality, that payment that, I was talking about earlier that we do end of day. It doesn't need to be end of day when you've got a digital fiat version of the currency. And then you're talking huge differences in funding requirements that today, one example I give is you've got a bank that opens in New York at 8 a.m., closes the UK at 5 p.m., right? You've got that window where you have to have money sitting in the UK to close your books, right? They have an end-of-day settlement in every country. Then you got to have money to open your books. And you've got that money locked up overnight because you can't move the money intraday for settlement finality. You can move the money, you can do the transaction and it looks like it's moved, but the actual settlement in that central bank's account is locked up. So if you take even a $2 billion overnight funding and remove that and allow that money to move over to the US, that's a huge savings for any corporate treasurer, any bank. And there's a lot of large companies out there that do have large fundings between the countries, any international multinational companies. So the possibilities that can be built on top of that, that's just one example, are endless. But it's that settlement finality piece that is the huge difference with the central bank that is not what's out there today.
Well, that's so interesting, and we are coming up on the 12:30 mark, and so we just want to thank you again for joining us. E2E Blockchain. Is there anything you want to plug, or any website or email or anything you want to leave before we sign off here?
I appreciate you having me again. We're early on the whole process, so our website is e2eblockchains.com. Right now, we're just working with you guys, BlockSpaces, to get those use cases documented. We've got a few companies that have already developed some applications. We're in pilot stages, so I think a lot of what's going to be live in probably the next, well, now it's almost 2021, so probably the next 6 months or so, we'll be pushing a lot more.
That's awesome. And we, like I said, we are just delighted to have you as a partner. You guys have been amazing. And if anybody wants to talk more blockchain or stablecoins or central bank digital currency, always feel free to hit any of us up. Rosa at blockspaces.io, Gabe at blockspaces.io. Or our website, blockspaces.io. And we're just thrilled to have such an amazing community that has really been able to provide some excellent content, we think, for the people that are trying to learn about this emerging technology. So we thank you very much, and you guys enjoy your pizza on Bitcoin Pizza Day, and we will see you next week.
Thanks, guys.
Thanks. Bye.